Good morning, traders. I hope you're all doing well. It is a Tuesday. What a beautiful day it is. We have begun really powerful, really strongly with a really bearish move this morning, which is unbelievably unexpected. Well, not really true, which was expected, at least on my end. I expected it. If you have not been trading this consolidation zone, I think there are a few things you can still catch up with in this consolidation zone. But if you have been trading this consolidation zone, you probably already know what you need to do at this point. At this point, I would expect a pullback to that zone right there, from where we are. A good example of that was right around here. We hit that zone. From that zone, we come back down. Actually, that was not it, not quite, but right. We come back down, and then from this zone, we always go back up, and then the process of oscillation continues. And not that I have this measured zone here drawn way down here, but really do note that I have this line drawn up there. That line typically is my exit zone every time, and that line actually is catered for by this zone that I've just drawn right now. So with that in mind, that means that a day opens whichever way it goes. Like for example, we're using open range breakout right now. I'm looking at 30 minutes candle, and if I put at 15-minute candle, you will see still the same thing. 15-minute candle, whichever way it can open, we go and close on the other zone, and we expect a bounce off from that zone. However, if we put this on a longer time frame, like 4 hours, you will see that we are currently definitely sitting in that zone, but we haven't broken through it yet. And remember, the whole market is still in an uptrend. Um, and the whole market is still in an uptrend, and with the uptrend, we have level of support and level of resistance, which the level of resistance becomes weaker, but the level of support becomes stronger. Okay, so that means that this level of support, which has been this has been the level of support for a long time, this might be weaker. This might be stronger. Sorry, this level of support might be stronger, and also might be a weaker resistance. I mean, yes, a weaker resistance. So in any case, um, we would still expect a pullback from this zone to go back up to around 564 on SPY and all that. I might have actually said that in reverse now that I'm thinking about it. But just in general, we are in an uptrend. On an uptrend, um, oh yeah, this becomes a strong level of support, a strong level of support, a weak level of resistance. So meaning this has been acting as a support. It should hold for a very long time. To break through it will take some gas. So that has been a resistance level up there, and that resistance level we would expect to break that at some point because the market is in an uptrend. If we do happen to break below, just note that this should really um, tank here in a little bit. Just keep an eye out, do your homework, carry your research. But I'm expecting that if I was to swing this, I would definitely buy a call option right around where we are right now, and that should give you some returns. But you just don't definitely never really buy. What I would do, let's get back to the shorter time frame, 30 minutes. And you see in the 30 minutes we're having this green candle starting to pull back, form to pull back, um, which means, yeah, there is that's your entry actually. for your call, and then just put your stop loss. I'm using the ATR. The ATR value here seems to be 1.98 for SPY, which means the value up there minus 1.98, which we have 555.8 minus 1.98. That would be your stop loss, which is a few distance off from the lower previous low, which is I would put it right around here, 553 actually, just to be safe. I'll put it at 553.43 there, and that would be my stop loss. And I would expect that to um, to bounce off from there. Remember, it's still 8 in the morning. There might be a few a few um, pullback here, but we had a good start. If you look at the ATR is starting to slow down, indicating that the actual chart itself should go up, which is a great sign. So just keep that in mind, guys. Really, really beautiful things here. Really beautiful things. Like if you haven't watched any of my videos, I covered a topic on how, open range breakout, why it's really, really important to us, and why we should use open range breakout. Like the day breaks, the day opens, breaks, and you're off to the moon, just like that. The day opens, break, you're off. And here you see here's a bull engulfing candle, a bull engulfing candle. If this closes above the previous candle, you just know for sure we are at a great reversal point, and expect that to ride a little bit up to the moon, okay, to the upper zone, and which is a great thing, really, really great thing. All right, I'll check in with you guys later, catch up with you guys later, and for now, just think about some of those, how you're gonna plan your move. Um, if I actually, let me see here if I can. Uh, yeah, let me do one thing. What was that here? Let me do this, and then let me do that. Reset that. There's too many drawing, too clustered. Remove all those drawings. All right, that's a 30 minute. Let's do it at 15 minutes. Um, at 15 minutes, we're using Ikenashi. With Ikenashi, we have a put signal over there, but this is Ikenashi. So you know, we would still capture something even though the signal came late. And then we had all these beautiful things going on with Ikenashi, and then I have this line here which ultimately captures the move that I missed. Um, if you might see that around that candle or within that candle, within this line or around this line, um, we have the moment where the market reverses. At least um, there's some pullback around us, around that. There's always some pullback around that line, which is great, really, really great, because that allows me to capture the moves that I've missed, unless if I have a day like unless if I have a day like this, which day is it? Okay, a day like this, which the first candle tells you to sell right away, which is of course put. Um, and if I remove that from, I can actually uh, let's use the extended hours, because I think I'm missing something here. All right, using extended hours actually give me a very good signal. We have a put signal right before the market open, right before market open. Every criteria was already met. We knew for sure we're gonna go short. Um, and then, yeah, same thing. We have something strong rally. You know, those things showing up. And we should have a strong rally here. I am not certain. It should be in a 30 minutes time frame also. Maybe not. But yeah, whichever, regardless of what's going on, we have a pullback, which this should be your lower low of the day. You put your stop loss a little bit somewhere right around here, or you can wait until three. Not three, until 9 in the morning or something like that, and then wait for that retracement, because there's going to be some retracement at 9 normally, from what I can tell. And then you can trade that retracement, which is a few candles off. You're trading off a few candles, which is still great, great, great. Better than missing off everything completely. But this is absolutely stunning, because you have a perfect breakout followed by a perfect bull, I mean bear candle, and yeah, it's just gorgeous. All right, I'll leave you guys to that. Check me out later. Bye for now.